Hello friends, welcome to your own channel. Today we'll be discussing another chapter in the series of trading 6-minute system where we have discussed till now how to identify swings and how to anticipate what exactly is going to happen by employing order flow expectations. In the another chapter we have dealt about the strength of swings. If the swing which is moving up is having fierce strength in buyers, or it is when it is moving down it is having a fierce strength in sellers. Today, I'll be explaining the concept of precise entry point. So we'll be identifying the locations on the chart once we have identified swings and we have identified that which of the market participant is losing their strength. Is it the sellers or the buyers? After that, we'll be aiming a precise entry. We'll be providing a high risk to reward and we'll be trying to enter into position there. It's a very important concept. Yeah. So stay tuned and watch the video full. Okay, if we go to the daily chart of this particular chart, which is Piramal Enterprises, we can see that the stock was going continuously down from here. A small swing here, then here, then up a retracement, then a swing down, then the retracement up. And here the final swing was very small. So we should have made an idea in our mind that the sellers are losing strength over here, and there is a possibility that this upper swing, this very swing is not sustainable and could be broken in the future, which it did. Since this swing was not too big comparison to this one or this one, that means the sellers are losing the ground and passing on the charge to buyers. So what happened next? The next thing which happened was buyers crossed this one, they crossed this mark, this particular thing, making a new structure high here. If we go by the expectation analysis, our next expectation was that it should give a retracement downside. So it gave a retracement here. After that, our next expectation should be a push to the upside, which it did. It made a new higher to the upside. And after that, our expectation should be that it should give a retracement. It did give, expectation was met. And last expectation as per the chart, it should give a new high, which it did. Now here comes the point. This new high was very weak in comparison to the previous one. Meaning, now in this area, sellers are taking control and buyers are not able to push the price too much high. From this point, it only went little far, right? That means now we either expect a deep retracement, or we expect that this particular higher low would be broken in near future. And in fact, this was broken, right? So we identified, just before the price retracement, that this could be get broken because the buyers are not having a big jump here. The upswing which was made here was quite weak, but we can see that sellers pushed here, buyers came here. Sellers pushed till here, buyers pushed to this high, then they pushed again to this high low, and in the current session, the previous session, it broke this thing. If you see, this particular high got broken in the previous trading session. Now, to have a very precise entry, we'll go down to 15-minute chart. Firstly, it was a daily chart. Now we can see the swings clearly. On daily, the chart is moving in uptrend. It had just started to move up. Now if we drill down to 15-minute chart, we can clearly see that the swing to the upside has been made. If we see, this was the last lower low. Now the price went up but could not go up completely. It retraced down but could not go completely down and was not able to break this low. After that, it completely went up and broke this low, this high, previous high. Now this high is the lower high which was responsible for creation of this lowest low. Since this has been broken, now we can say that a new structure high has been formed here. New structure high formation leads to a uptrend. That means now Piramal Enterprise is in a uptrend. So once uptrend has been established, our next expectation should be a retracement, which already has started. As you can see, now there was one query that how do we consider that swing, which swing has to be considered? Why don't we consider this high? If we put our Fibonacci tool, we will be obviously placing from the lowest point to the highest point. Now somebody was asking, why don't we put it here or here? Why here only? Because if we put it here, this is not a new high. New high only will be made once this is broken. So above this, we have considered this full swing. We could have considered this, but this is a very small retracement, and in comparison to this particular swing, this is very low. In fact, I only consider a swing completed when there is a structure break. A structure break means something like this. This went up and went down. Went up and went down. That means a downtrend has been established in intermediate swings. If we consider this, it was a one leg retracement downside, went up, one leg retracement, went up. Now from here it is started a small downswing, a downtrend movement. Now we expect that it will be doing something like this and might come somewhere in the area where we expect the price to come, so that we can open a long position. Why long position? Because it has already made a new structure high, and once it has made a new structure high, we only anticipate for a long position, no shorts. Now if we break this particular thing into two parts, just bifurcate it, then there are two parts here. One is upper 50% and the other is lower 50%. Right? Now, for opening a long position, we are never interested in this area. This area will be a premium price. These are the terminologies which I have established. If you want, you can use something else as well. And this is the area where we are getting the prices in discount. So we do not buy in a premium price. We only buy in a discounted price. Then only we should anticipate a good risk reward. So forget this part, upper half of the 50%. Premium, we are not interested. Once this price comes into this area, doing something like this, here, we can put alert somewhere around 61.8, which is roughly 1745 or so, right? Once the price has moved here, we should be alarmed that price is in our optimum position, optimum buying position range. This is precise entry position. we'll be always targeting this price somewhere around 61.8 retracement. So once the price is here, we will further drill down to 3-minute chart or maybe 5-minute chart, whatever you are comfortable with. On the 5-minute chart, you will see that price will be doing something like this. It will come here, it will make some consolidation, and in the same way, it will start making new highs and new lows. And once you find that the price has started uptrend in the smaller time frame as well, you see the daily has started its uptrend, right? Daily just began its small uptrend. 15-minute is in uptrend, and 3 or 5 minute uptrend. We need to have this thing. Once these things are established, we will be aligned with all the time frames, and our precise entry position will again be this. We will start measuring this smaller swing. Guys, you need to correlate it. We have seen a 15-minute swing, right? From here to here. From here, this lowest point to this highest point. We have applied a retracement tool. Now, in the same way, we will be applying our retracement tool in the lowest time frame in this smaller swing, right? So once we get a 61.8 retracement of this smaller swing, we will be opening a buy position here. A precise entry position. We will be opening a buy position here, keeping the stop loss just below this. Now, the point to be noted here is this is a risky trade. Risky by the means that we may be facing some correction here. Price may do something like this, which is fine, which is completely fine. We are already playing with, we know that we are playing with probabilities. So our risk will be very, very small here, right? And in case we are getting a better setup here, again like this, then we will be opening a position somewhere around again. So that will be another shot with the same position. It may be a possibility that we may get a hit here. It may hit our stop loss. That's perfectly fine. It's part and parcel of the game. But if you see, now this was entry, this was our stop loss. Now the third point is to discuss about the target, potential target. We always aim for a one-to-one extension of previous swing from 61.8 retracement, which when once measured comes precisely somewhere around 127 extension. This is always true. It will come somewhere around 127 extension. Now our target will be always here. Always here. So if you see, we are getting a risk to reward ratio of 10.94. That's insane. You see, that's the beauty of this trading system. You will get a hit which will be very small, and when you hit the ball, it will go out of the park complete. So this is the beauty of this complete system which I'm trading, and I'm just transferring my knowledge to you guys. It is giving more than 10 hour of profit. So no matter you lose 2-3 trades in a row, once you get a single profitable trade, you will be able to eliminate 10 losses straight away from your account, which actually does not happen. The strike rate of this particular system is more than 50%, right? So this, I can vouch on this system that you can use this single trading system, for a living. You can trade for a living using this system on any time frame. I can bet on that. That's the beauty of this system. I mean, nobody will be, teaching or telling this precise system, these kind of system, which are having these kind of risk reward ratios. These are some premium concepts. So once you get a target in the range of this 10, 8, more than 10, this is what a profitable trading is called. Getting my point, guys? Sorry. So once we are able to get in the trade with this kind of precise movement or this kind of precise timing, our targets are, just above the sky, like this. So you can, if you should not, rely on my words. Just open any random chart, drill down to any time frame, and start marking these things. You know, you can try to practice these things from here, from here, from here. Highs and lows, highs and lows. These will be found on every time frame you navigate to. Every time frame. Now, once you make a new high, you just keep back testing or testing whatever you can. I'm not too much enlightened by the idea of back testing. It's just a waste of time for me, at least. I jump in quickly. Whatever idea I have, I'll be trading with my actual account money, so that I can see what exactly are the emotions which I'm facing. You see, in the process of this execution, you might be getting multiple losing trades, 3, 4 trades in a row, which will be losing. But yeah, mark my words, it will take only one trade to wipe all those 3, 4 trades, and you will be in winning position. You will be getting a very handsome profit if you hit this target. Okay, that was Piramal Enterprises. Let's try to find some other random stock. It is going up. Okay, let's see there. Now, from this point, Siemens has started an up move. And one more point, which I would like to make. If you are, trading today, you are about to open the chart of today's data and you'll be trading it. You do not need to gather the information of this much all the time. I mean, weeks or months. You only need to have 3, 4 days of days prior data. That's it. Nothing more is required other than this. When you open a chart, you should look where the price is actually, where the current price is, and what is its implication just 2, 3 days back. 1, 2, 3. That's it. What was going beyond, prior 1 month or prior 1 week, it's not important if you are trading intraday. Okay, let's try to apply the same concept here as well. You see, it started moving up, down, swing. Now here, this is internal movement and new swing high was made here. You see, new swing high was made here. I'll show you. This is the first up move, right? Once this was broken, the another move was this, and once this was broken, another move was this, a smaller swing, this one, right? Okay. Now, if we identify that this swing has been, this is a move, and after that, this was the main swing from here to here. Did we get a retracement for trade? Did we get this price in this area below 50% or below 61.8? No, we did not get. So this is not our trade. We skip it. We do not need to trade everything. Intraday trading does not mean trading every day. you need to pin these lines. Intraday trading does not mean trading every day. Completely different aspects. Okay. Now after that, we got this thing, right? We are getting this smaller swing. If you would have employed the same concepts, 61.8 entry was somewhere here, and since this is swing is itself very strong, very little, you do not need to go down into lower time frame further. You can if you want, but I would avoid because it is already very small, right? If you want, you can still go down to this particular position and see that a higher high was made here. It went up, went down, and it broke this area and went up. So if you want, you can apply Fibonacci tool even here as well. You can apply the tool here as well. So what you will do, you will put the 61.1 order, put the stop loss somewhere around here. You need to look the price movement around 61.8 retracement of the original swing. So you can see it, blew this area of 61.8. Sellers were very strong, but from here they went up, tried to go down, but they were unable to break this previous low, and in the process they made a new high. So at least we can anticipate that this particular swing is strong enough, right? Either we can put the stop loss somewhere around here below this swing, and we would have got the entry around 61 point. 61 point will be somewhere around here. Okay. Now if we go back to 15-minute chart and see our original swing, removing all this. So what do we see? What's our target? Our target will be extension of this original swing. Now mind it, once price was doing its thing here, we would have been in some loss. At some point we would have been in some loss, but without getting disturbed with that, what would have happened at the worst rate, right? We would have taken a hit, but that's okay. That's part and parcel of the game. If we extend this toward the extension of 127, we would have got our profit, which is close to 6R. That would have been a very nice trade. You see, it would have been a very, very nice trade. Losing 1 rupee and gaining close to 6 rupees, which is absolutely phenomenal. So this is it. We can find these setups on any chart, any time frame. Now this is rain. What do we see here? Suppose we open the chart, we see that price is moving down on this and this is our lower high. It broke up, it make a new structure high. Then our expectation was that retracement, it gave a retracement. Then our expectation will be a new high, it gave a new high. Then again our expectation was a retracement, that was met. It again made a new high. You see, every expectation is getting met. Now what will be our entry if we see that this price had made a new high here? What will we do? We'll pick the retracement tool, put it over here, extend up to this highest high. If we want, we can directly enter the position over here, putting the stop loss somewhere here below the swing, and our target will also be close to this point, which is absolutely met. It is giving around more than 2.5 R. It would have been a small trade, but still it is way much better than 1 2 R one-to-one, risk reward ratios which are being floated around the YouTube or multiple block positions. Once this was met, we will expect another position somewhere around here. Somewhere around here. The 61.1 will come somewhere around here. If we want, we can put just below this swing low, because this is also a small time frame swing low. And now, yeah, this is a point which I would like to make. In this case, our target is here, but the price is not able to reach that point. So what do we do? In this case, once price moves to our previous high, which is this, in this case, we move our stop loss to break even. Once this has moved to this point, we will be moving our stop loss to break even. Then in any case, if the price retraces, there will be no loss. It will be a zero loss trade. And if it moves further from here, then we will be getting our target. All right. So this is the precise entry concept, which is very premium. Nobody teaches it. I'm frankly telling you, nobody explains this thing, for free. Nobody posts these things, which are years and years of practice and, research. So this is it, guys. This is for this video. In the last video, I'll be just explaining about the trade management and risk management. And one more part will be coming, in which I'll be putting it all together. I mean, all the concepts will be put together to just frame a complete system. Till then, if you have any query, please post in the comment. I will try my best to reply it and try to resolve your query, whatever it is. Please subscribe my channel, share it with your friends and family so that maximum people can get the benefit. Thank you very much and happy